This time is really different, and the BS meter is going through the moon. What's up, everybody? Welcome aboard. It's Bubba's Bottom Line, and always great to share some time with you. And all last week I kept hearing that this time is different. There's reasons. We have the tech-centric market. We've got this market, and you need to buy some cheap protection just in case. But there is no reason to believe we're not going to the moon. And I go, really? We've heard this since the Stone Age, that this time is different. And if we go back and look at Tulip Mania and the South Sea Bubble and the Cotton Panic and the most recent panics, we know one thing for sure: it's never different. But of course, remember who are telling you that this time is different, and the people that are telling you that are the people that benefit most from telling you that this time is different. Because when you know that the person that you're dealing with does not have their own skin in the game, but yet they're worried about getting the commission from you, you have to be in the market. So this time has to be different, okay? But if you take a look at what's going on throughout the markets and throughout the world, again, we're not predicting a top. We're just saying that it's time to be careful. That there's a difference between saying that this is the top and telling you to be careful. As you know, or maybe you don't know if you're new, we believe in always being 100% invested in the market. We just believe in hedging it and being able to compound our portfolios and be able to buy markets when they're breaking. When everybody is panicking, we know that we're protected. We want to be buying. But that's not how most of the world thinks. And of course, I heard last week that somebody said, well, why don't you just buy some cheap options or cheap protection? Well, let's clarify that for now. There is no such thing as cheap options or cheap protection. All right, options are always fairly priced. Options are priced by, you would consider market makers, actuaries. Do you think they're actually giving you a discount? No. And if we go back and just look back at 2015 when the markets were up 21%, if you'd have been buying that cheap protection, what would you have had? You would have only made 3%. So again, you have to learn how to hedge your portfolio, but it can be done. We do it all the time. But when you're listening to these experts that are telling you, they have one reason in mind. That is to get their commission, so you have to be 100% invested in the market. When you're in cash, they're not getting paid. All right. So let's just remember that this time is never different. The BS meter is going through the moon right now with this is different. Tech-centric market. It's a stealth bull market. And I'm not saying we're not going higher. I have no idea. Okay. I would be more likely to want to be short in this level. I mean, I see the 10-year being at 3.5% by the end of the year. Of course, that would be if the Fed would get off there, you know what. But of course, we just heard them last week, and what they do, they did nothing as usual. Okay, they're going to wait so long to do anything that they're going to be far behind the curve once again. Now, again, this is not me talking. This is a fact that they have never made the right decision on when to exit one of their ridiculous programs, okay? As we referred to them during the week, the 3 blind mice that are clueless, we know that if the economy is as good as they say it is, okay, you couldn't necessarily prove it by me, but again, I see improvement, but you couldn't prove it all by me. But if the economy is as good as they say it is, why are interest rates still being throttled down? Why are we not seeing the free markets take place, okay, and allowing interest rates to rise? Now, we heard Fed Chair Powell talking about, well, we're worried about the trade wars. Well, it's amazing that the Fed is worried about the trade wars when they don't know what to be worried about. But it's also amazing that all the markets have gone higher since the whole trade war thing started. Now, what do we know for a fact? We know for a fact that China has to come to the table. If you look at the stock exchange, the Chinese markets, they're in correction territory. They're in bear market territory. They are not going to be able to sustain it because we are, of course, the #1 customer. And I think from people that I've talked to, from business people to farmers, throughout, nobody's concerned about the trade wars. As I've said on many, many occasions here, is the only people that are worried about the trade wars are the lobbyists that benefit from them and the politicians that get some kind of special quirks. So when you look at it and you say that we are so worried about the trade wars, everybody wants to make this the story, but the markets are telling you it's not the story. Do we not understand that the markets tell you what you need to know? Okay? And what we're seeing right now is we're seeing that many stock buybacks still, which is based on the cheap money. This is the Goldilocks economy. And by the way, the Goldilocks economy does not give the middle class the porridge that's just right. Okay? The Goldilocks economy gives the big corporate the economy that's just right, because they're getting to buy back their stock. But it's interesting who's selling the stock. The insiders are selling the stock. The retail buyers are buying the stock on the story, which we warn about often, is don't trade the story. By the time the story is on the street, it's already back page news. You're way behind. If you're looking for an announcement to trade off of, you are way behind, because you've got the big banks, the big commercials that are buying this data well ahead of time. They are scouring the tape. They are paying millions and millions and millions of dollars a year to scour that tape. And we have had and had proof of insiders inside some of these conferences, okay, that were getting information out, which you're not supposed to do, but that were beating the tape anyways. So if you think that by the time you hear it reported on whatever business channel that you watch, you are going to end up with a lot of egg on your face and going to be well behind the curve. Now, as we said here and on Bubba's Daily Update, what we were waiting for, and we almost guaranteed it, okay, that Apple was going to hit $1 trillion before the markets would even think about selling off. So now we've got to that point of Apple $1 trillion. That doesn't mean you step in and start selling today. What it means is that now I'm looking, these objectives that get met, it's like Dow 10,000. Well, actually, I remember Dow 1,000, but it's like Dow 10,000, okay, Dow 20,000, Dow 25,000. These are milestones that mentally get people going, and once they get there, usually there's some disappointment, okay? It's there. We've used all our energy. I gave you the better analogy, the sports analogy. You've heard announcers, if you watch sports, a team was down a lot of points, they made a dramatic recovery, and then they ran out of gas, and then they end up getting killed anyways. It's the same way in the market. We expended so much energy getting Apple to that $1 trillion that more than likely it will sell off a little bit from here. And again, long-term history, we are bullish markets. Short-term, right now, we're getting ready to be bearish because we believe higher interest rates are coming. We believe a much stronger dollar is coming. We believe that we have basically run this cycle to death. Now, we're not telling you to sell. We never want you to sell your equities. We want you to hedge them. And we don't want you just to start to short today because we think that we're in trouble. We want to wait. Okay, remember, what we look for is that big sell-off, and we want to see the subsequent rally and what happens from the rally. So that's what we look for. And that, again, we're going to be very patient here. Now, we had a less than stellar job number on Friday, but everybody's trying to make it that it was okay. It's going to be revised. And this is one of the problems I find with all these things is, yeah, it's going to be revised. We're going to have this. We're going to have that. Look at the wages, okay, the wage growth, which is not good enough, okay? If we're so overheating and so great, where's the wage growth? But again, this comes down to the entire cycle of crap that we deal with all the time because of all the manipulation that goes on throughout this. This is where we talk about the dollar and the manipulation of the currency. This is one of the things that troubles me is that we've seen, the Chinese were devaluing the yuan. They've now tried to put a floor underneath it. But these are the currency wars that create all this artificial story around everything because there's nothing backing them. So you can create as many dollars as you want. And really what that does to the average individual is that takes your money, okay, and makes it worth less. Well, it's sitting in your pocket. That's why you can never be in cash, is why you have to be somewhere where you can compound your money. Because what you have going on here is this phony inflation that is created not by the free market, but created by the Federal Reserve, created by government to help finance all this crap. And you can see what a great job they've done. They've only put us trillions of dollars in debt, okay? And that's just from a government standpoint. But that is why they don't want to have a hard asset or a cryptocurrency as the reserve currency, because they cannot be manipulated. And the manipulation, the currency wars, they're a fact of life right now. The fiat currency system is bogus. The fiat currency system is unrealistic. And again, I use the example, okay, of using actual silver. And this is from my good friend Alan Butler, all right? But if you go back to 1964, in 1964, a silver quarter would buy you 1 gallon of gas. In 2018, a silver quarter and pure silver would actually buy, in today's current value, would buy you 5 gallons of gas. Okay, so what I'm saying to you is that the overall creation of these government interventions, these currency wars, this money manipulation, this money printing, and destruction of your dollars and mine, okay, makes all of these numbers just bigger, but not real, okay? And that's where we're, at some point here, we're going to have to see some major forgiveness in debt, because our debt is ridiculously high. Auto loans, student loans. I mean, I heard somebody talking about this week about what how they're going to have to forgive a lot of this debt. Well, how come I'm not going to forgive my debt? I paid cash for my kids to go to college. So to me, that's a problem. So the jobs number was just really okay. I mean, again, I remember job creation of 500, 8,000, 500, 800,000, and now I see they get excited about 157. I don't know. Again, I'm not against it. Listen, I'm an American. I want this country to succeed. I want everybody to have a fair and equal chance to succeed. But I am really tired of the BS that is put out there around us. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. Todd Bubba Horwitz, we're coming right back to you. What's up, everybody? Remember about our high school investing program, highschoolinvesting.com. We're going into our 9th year, and we're on a shoestring. I can no longer pay for it myself, and I've had some help from some of you on Patreon, and I thank you so much for all that. But if we're going to get this to go another year, I need more help, and that's, if you want to help us out, go to Patreon, patreon.com/Bubba Trading. That's the only way we're going to be able to get this thing going through another year, unless you want to sponsor the program. If you're a financial institution who think you could benefit from sponsoring it, great. But again, it's expensive to run, it's expensive to keep going, and we want to educate our youth so we can get away from all this crap that we've had for all these years. In the meantime, that's patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course we had last week our 5th consecutive up week. No surprise. I mean, listen, we're in the dull markets of summer. Dull markets are going to drift higher. That's a fact. If you remember one thing only, money is always going into the market, because between mutual funds, 401ks, IRAs, SEPs, all those programs, they buy every day. No matter what, they're buying every day. The question is where are the aggressive sellers? Well, again, we're in the heat of summer. There is no real reason to step up and say it's time. What you want to watch for as a trader or as an investor is you want to watch, first of all, the security that you would want to buy. Okay, you want to make sure that it's at a technical level that you think, you know what, looks good to me, or I'd like to buy it at. Not because you heard some fundamental data, because, like, again, I always go back to Apple 2011 when it was 700, they had the special ticker, and everybody was saying how they had the biggest earning quarter ever in the world, and the stock got cut in half over the next couple of years. You want to buy on technical reasons. You want to have strong fundamental companies, but you only buy it for technical reasons. In the meantime, so now you look for something to buy, okay? You look for a reason to buy or sell, and you let the markets dictate to you what your next action is. So right now, the VIX is making new lows, which means complacency is what we call complacency reigns on the market. So that's not the time to start getting aggressively short here. Okay, again, if you ever get too aggressive in a market that is this slow, you might be 100% right, but you know what might happen? It may go against you just far enough to get you out before it does what you think it's going to do, which is why you have to have more patience to wait and let the markets come to you, okay? Maybe you miss a trade, but remember the motto from Bubba's Bottom Line and Bubba's Daily Update and the Bubba Show. It's better to wish you were in a trade than you weren't, okay? So you want to watch the volume, you want to watch the volatility. And right here, to me, I think we're much closer to a big market meltdown than we are to a big rally. Now again, if you're just a pure investor and you don't want to hedge and you don't want to do anything, then don't look at your IRA every day. Don't look at your portfolio every day, because all you're going to do is create aggravation for yourself, and then you will panic out at the bottom. If you're a trader, look for the right levels, and to me, I'd be leaning for opportunities to be on the short side. I think when you look at what's going on, you've got gold is in a total coma. Nobody cares about gold. It just keeps going down. Okay. Now, again, at some point, it will find a bottom. Okay. But right now, it's not it. I would not be, every buying opportunity has been met with huge sellers. So I would not be a buyer in gold here. 1180 would be where I'm looking. However, in the grain markets, the grains, as we've been saying here for weeks when they were down much cheaper, grains are a great buy. Okay. Trade wars or no trade wars, this trade war stuff, you know, I wrote an article this week. Will somebody help me please make up my mind? Okay, the trade wars are on, the trade wars are off. China's coming to the table, they're not coming to the table. I don't know, I'm not sure, we'll see. The grains look great, they still look great. Now again, I would not be surprised to see a little bit of a pullback. And that's what we're looking for. We're looking for a pullback to support to be a buyer. I think the meats look really good, except for hogs. They look sick and slaughtered. And of course, they're taking me with them because I own them and I'm sick and slaughtered with them. But I think that we're finding a bottom there as well. So I think that that's what you have to look at. And all you have to know about the trade wars, forget about all the news you read from the lobbyists and all the jerks out there, okay? All you have to know is watch price, okay? Soybeans have rallied back $1. Wheat's rallied back over $1. Corn has rallied 40 cents, okay? The meats have rallied, they never stop. So where's the big worry, okay? That's the whole thing. Watch price. Stay away from the sounds and news. Price. Price tells you everything. The action tells you everything. Markets are so complacent. Where's the fear of the trade war? Okay? So, what we look here is we see, as you mentioned, jobs are mediocre. 3.9% print. Okay. Listen, I want them to be good, but I want to see more of a battle for employees again. That's what I want to see. I want to see, you watch how the bidding wars that go on for major league talent. I want to see that for good workers. Okay, I don't want to see the government step in and make a higher guaranteed wage. I want to see something going on that brings higher wages. We have it going on right here in my neighborhood. There's a big new store opening up, and they're paying about 15% more than any of their competitors in the neighborhood. I think that's great. Okay, now they have their own selfish reasons. They're paying more because they have to overhire so they can figure out who can work for them, but they are creating the market, and they can push the market higher, and that's what I want to see throughout. I want somebody to come up and step up into it and bring it up. Okay. Now you're going to read probably some articles this week, with all the good things happening in the NASDAQ, and it's you're going to hear NASDAQ 10,000 and so on and so forth. And I agree. I mean, I do believe that the NASDAQ will go to 10,000 someday, but I would bet, and I would make this bet for a lot of money. Obviously, I can't trade on this bet because you get ground out. But I would bet cash that the NASDAQ sees 5,000 or 6,000 before it sees 10,000. Okay. And again, it doesn't mean that I'm bearish. I'm not a perma bearer. I'm a realist who understands how the markets work. The markets work in mysterious ways, but they always work the same way. Okay, we're getting to that point that we always work the same way. But in the meantime, okay, why has the Fed not hiked? Okay, and we'll cover that in our commentary. Okay, because again, it's something obviously that I want to talk about. But why are we seeing such a pushback on the cryptocurrency world? You know, I know that the ability to try to get some of these new ETFs in play. Cryptocurrency is the financial revolution that we've talked about. Okay, cryptocurrency is, again, is there too many? Of course there's too many. Are we seeing some issues? Of course you're seeing some issues. But did we not see the same story in the NASDAQ? And look at the NASDAQ today. Okay, what it looks like is you're seeing a financial revolution of people that are tired. You know, when you listen to the socialism run and the people that want to bring socialism to this country, it makes you even more desirable of wanting to go after the cryptocurrency world and put your money where it's not controlled. You know, one of the nice things about certain asset classes is they cannot be manipulated. Okay, yes, they can be manipulated by a big buyer or a big seller, as we saw from the Hunt brothers back in the day, and as we've seen in some of the cryptocurrency world. But that takes money to do that. That cannot be manipulated with the stroke of a pen. Okay, so you're seeing, and I think you're seeing a great opportunity here. And do I know which ones are going to be the good ones? I do not. But it's a great opportunity to invest small money in a number of different ones after you've done your own due diligence to say, you know what, maybe I want to put a few $100 in here. Again, it doesn't have to be a lot. You don't have to take your whole life savings and put in there. But the cryptocurrencies solve a lot of problems. They take away the manipulation of the Federal Reserve and other central banks around the world. They allow the free markets to work because remember, those trade 24 hours a day, okay? And they're only done on true price discovery. There's nobody setting the price, okay? It's not like the Chinese yuan or renminbi, same thing, where they set the price and tell you how much it can move each day. This is a price that is only driven by the true free market and a price discovery model, which is God forbid we should ever get back to just a true free market, which what I think with the trade wars is what President Trump is trying to accomplish. And I think that there would be nothing better than to go back to a true free market where price discovery, I want to buy, you want to sell, the exchange of wealth takes place, and we go on our way. Okay, and we're putting in a price at what we think it's worth. It's no different than a true house, but of course, when we look at real estate, that's too manipulated because of the interest rate market. So your house does not actually, it's not a true value. You see true value in cryptocurrencies, you see true value at a flea market. Anytime you're paying cash for something and somebody's selling you something, you're seeing a true market. If you're using the financing, then the financing role takes a big part of it. And of course, that's one of the issues which we also talk about in our commentary today. But I think that the criticism of what President Trump is trying to do with the trade wars, I think is extremely unwarranted. I think it's of ignorance. I think it's of selfishness, and I think it's of backdoor thinking, because everybody wants to go back to Smoot-Hawley. Everybody wants to go back to what Bush did and what Reagan did with some of the terrorists, but nobody decided to go after all of it at one time and come out openly and say, let's trade free. Okay? This is a person that wants just to open up the markets to free trade. Now, we know that Mexico has said that they think there can be a new NAFTA agreement in place before the end of the month. I think that's a real possibility. So I think all of this will work out. I've said this time and time again. I do support what the president is doing. I believe that we do need true free markets. In the meantime, I'm going to step out here for a break and come back with my commentary. This is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with more of Bubba's Bottom Line and my commentary after the break. Well, everybody, as you know, it's back to school time. And of course, we're trying to get our high school investing program up and running and continue to get it go. And I need some help if we're going to keep it going. And I thank those of you who helped me in the past. But if you want to help us now, go to Patreon, patreon.com/Bubba Trading, and help us educate our youth. And also don't forget to catch the Bubba Show every day at 4 to 5 Eastern at libertytalk.fm. Now let's get back to my commentary on Bubba's Bottom Line. Back to the show. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And as always, I have something to say, right? I have my commentary for the whole show, but I get a special segment at the end here where I actually get to let it rip. And, there's a lot of things that I could go over, but the biggest thing, which is one of my easy targets always, is the Federal Reserve. Now, again, they are doing, in my opinion, again, this is an opinion piece, so it's my opinion, they've done absolutely nothing. Okay, they continue to make excuses of why they can't raise rates, and I want to know, why can't they raise rates? Please explain to me, if the economy is exploding, which they say it is, if everything else is going so well, which they say it is, okay, then why can't interest rates go higher? Okay, where does it say in the charter of the Fed, okay, that they're supposed to worry about what the stock market is doing? Now, I understand the stock market, but again, you know that I believe the stock market can go up 8% year over year, just not every year, and it needs to have a little bit of a meltdown anyways. But where is it written that the Fed chairs are supposed to worry about what the stock market does? Now, if we go back to 2013, May of 2013, when Ben Bernanke said we're raising rates, the markets had a meltdown, they called it the taper tantrum, and he backed off, and he balked. And so far, since then, each and every Fed chair, which would only be Yellen and Powell, have balked at every real increase. So we get a little quarter point raise, and of course, that is incorrect. If the market is as strong as they say it is, then it should be able to take this interest rate market out for a spin, and we should be at 4%, 3.5% to 4% in the 10-year, because what does that do? That opens up the window for fixed income people that do not want to be in the stock market. Okay, it lets them put their money in the bank where they feel comfortable, safe, and don't have to worry about it. But yet we have the Federal Reserve that continues to want to print money, keep interest rates low, let companies use that money to buy back their stock, and screw the middle class. Okay, that's what they're doing. Okay, if you've ever watched Trish Regan, she talks about the hourglass economy. Well, right here is the middle class that has to be put into the stock market. We all know that the market at some point is going to have a meltdown. And we all know that all those people that we call them the weak hands, are going to be forced to puke out at the bottom. Whereas they would rather be in at 3.5% or 4% in a CD. Why are we, so I go back to the question, why is the Fed so afraid to raise rates? There's got to be more to it. So if you go back to the creatures from Jekyll Island and the whole story of the Fed, that would make more sense as to what they do and to what they won't do, because they're only going to do what really benefits the very few, not what benefits the masses. Okay? We've seen it time and time again with the banks. We've seen it time and time again in every policy that they make. Never really benefits the little guy. And as I close here, I want to know, they were worried about the banking system in 2008. But why didn't they just take all the money they printed, all those trillions of dollars that they printed, and guarantee all the passbooks and all the savings and all the money that was in those banks, instead of guaranteeing the banks themselves and keeping them in business so they continue to make money and big bonuses while the average guy in the street was getting it stuck to him? That's it for today, everybody. That is Bubba's Bottom Line. I always thank you for being a part of the show. We'll see you tomorrow for Bubba's Daily Update, and back here again next weekend for Bubba's Bottom Line. Have a great weekend, everybody. Thank you so much. We appreciate it all. We'll see you later.